and welcome to this week's Forex Focus. I hope you've all had a good week in the markets. There were certainly quite a few moves out there last week, and there are a lot more setting up this week. What we're going to do in today's show, as always, we're going to go through the various FX pairs to see what opportunities we could look to take advantage of in the week ahead. So without further ado, let's jump over to the charts and take a look at those opportunities. So we'll start off with the Aussie Cad. Now, a lot of the pairs here that we're going to look at today, well, a few of them rather, are the same ones as that we were looking at last week. But last week they were sort of at the bottom of the move, and we were saying that we were waiting for a pullback. And now these pairs have all started to pull back, and they're pulling back to areas that we'd be happy to take the trades from. So the Aussie Cad's the first one. And the Aussie Cad here, as you can see, it's pulled back to the to behind the 100 moving average here, which is a nice thing to see, because we like to see that price has gone through some sort of an acceptance phase. And ultimately what we're looking at here, either on the 1 hour chart, as you can see here, or on the 4 hour chart. So we'll go over to, just get rid of that a second. On the 4 hour chart over here, we're looking for the market to break through the trend line. Now, what I particularly like about this trade here is that the market has broken through a structure level. It has pulled back to the moving average here, so it does show us that there's price acceptance. So then we'll look for some sort of an entry around this area here. What I think it's going to be is either a trend line break, or we're going to get some consolidation around the top here, which will create a nice little support level for us. So then if we get that support level, we'll then take the trade through the bottom of it. Okay, so that's what we're looking at there on the Aussie Cad. And what I mean by this, I'm going to jump over to another trade that we took earlier on, just to kind of show you exactly. It's not this one here. Give me a second now. Sorry, yes, this one here. So this trade we took a couple of weeks ago on the Aussie yen. It's exactly the same sort of trade. So you get the market pull back towards the moving average, and then you get to sort of move sideways and give you a nice support level. And what you do is you look to take the trade through the break of the support level. Okay, so you wait for a pullback. Once the market's done giving you a pullback, if you don't get an opportunity to get in on like a trend line break, or the trend line break looks like you'll be getting into the market way too late, what you can do is you wait for the market to go sideways a little bit and track around the moving average. And then once it's done that, you then look for the market to break through the support level. You place your stop above the high there, like that, and then you literally just look for the market to hit the next major support. So you could either wait for the market to hit this level here, and on that you would have got sort of like a 1.5 to 1, or you can wait for the market to hit the ultimate lows down here, and you would have got a much better risk reward. So that's the way you play those. Okay, so you're looking for the market to give you a pullback. You look for a trend, you wait for a pullback within the trend, and then you look for some sort of a significant level, key level, to be able to trade through. Okay, that can either be a trend line break, or you can look for a more horizontal line of support and resistance and wait for the market to break through that. All right, so that's the Aussie Cad that we're looking at. The Aussie franc, we're also looking at taking a short here. Well, Aussie and generally we're looking to take shorts against. So the Aussie franc here, as you can see, has, again, if we look at it on the daily charts down here, you can see that the daily chart is moving lower. It's moving downwards. We're in a downtrend. We're below the 100 moving average, which is obviously a bearish sign. We then get the market pullback. Now, there isn't really anything that we can take on the 1 hour chart, because on 1 hour chart, this is now turned into consolidation. So what I'm looking to take is sort of like a breakdown of this pennant stroke flag formation that we have here. So as you can see, I'm not going to take in this the bottom wick here. And the reason for that is I can encapsulate more price action here by just tracking along the lows of these candles, which kind of gives me, from this perspective anyway, this will give me a more reliable entry point. So if I was to go down from the spike here, the entry point wouldn't really make too much sense, particularly as we've got a support level just print directly after that. So I'm going to wait for the market to break below this level here. Once it's done that, I sort of want it to break one of the other support levels. So I'd probably look for it to break below the 67.08, depending how far along we get. If it starts to track further along to the right here, so consolidates some more, then I might look to pick a more suitable support level to trade through. But as you can see here, the momentum is definitely to the downside here on the Aussie franc. It's now moving sideways. If we can break it, get a break to the downside, I'm expecting a similar sort of move, and certainly some opportunity to pick up some profits. The Australian dollar is a big short. I mean, it's been a short for, you know, the best part of 18 months now, since it broke through the structure over here back in August 2014 at 0.9248. It's broken down there, and it's literally just fallen off a cliff. A couple of pullbacks, and those pullbacks were just literally opportunities to sell. You know, and what we're looking for is history to repeat itself. So as you can see here, the market breaks down some momentum. It gives sort of like a tiny little pullback before it breaks down some more. And that's what we've got here. The market's broken down with some momentum. We've got a little pullback here, and I'm looking for an opportunity on the 4-hour chart, this one over here, for the market to break beneath this trend line here, at which point I'll then be looking to take that short. The CAD franc is another one that I'm looking at. This one isn't anywhere near as pretty, by the way, so we don't have sort of like a nice trend line to pull back to. But what we do have is a lot of momentum, and we've got the market respecting a previous level of structure. So as you can see here, previous support levels, one, this guy over here where the market came down to, move sideways, and we're kind of playing with this level here. The market closed below that on Friday, which is a very bearish sign. If the market can then open and take us through this level at 72.89, which is probably easier to see if we move over onto the 4-hour chart. So if we can get below this level here, then I'm going to be looking to take the Aussie franc shorts. I'll probably place my stop above the high here, or potentially give it a little bit more room to move and place my stop above the high here and above the 100 moving average. But we'll have to see how that sets up when it opens up later on this evening. Then we have the euro pound. Now the euro pound for me is definitely a short. It's just finding the right area to get it. In fact, to be honest with you, I've actually already got a trade on here. I put on a trade when it closed below the level there, stops above the high here. It's kind of doing nothing at the moment, but I am looking to add another short if we can prove that we want to go low. And the proof for me is really if the market breaks on the 4-hour charts, if it can break below this level here. Okay, so this support level is 0.7244. If it can break below that level, I'll add to the position. Just dipped a toe in initially, so we'll add to the position below here and see where the market takes us. Okay, obviously it's not a guarantee. The market might turn around and stop me out. That's perfectly fine. But I do believe I've got enough conviction in this trade from just looking at this sort of price action here to say that, you know, again, history is repeating itself. Let's go back in time. We're in a similar position back in 2014 where the market had sold off quite a bit. It then consolidated. It had 1, 2, 3 attempts to go short, and on the third attempt it eventually made it. And we're kind of at that here. We've had 1, 2, 3, 4 attempts to go short, and what I'm hoping for is if the market can then break through that level, then we can see it at least attack these lows here and potentially begin its next leg down towards these sorts of levels here. So we'll have to see how that presents itself. The Euro New Zealand, I think we could have an interesting opportunity. Again, we've got momentum to the upside here. I think we'll have an interesting opportunity if the market can break above this level here. Okay, so we've got the nice spike high here over in the middle of August. The market has since sort of gone sideways from that level here. And now we're just waiting to see if the market can break through there. So if the market can get through that level, I'm going to be looking to take this to the long side to jump back in on this big trend that we've got going on here. The euro dollar is a short. waiting for the euro dollar to either break through this support level here. But the problem with that is that we're then running into this trend line here. So I think, you know, potentially the best trade to take here is if the euro dollar can break below this trend line here. And when it breaks below that trend line, if it can kind of consolidate around it, just prove to us that it's respecting it, and then give us another opportunity to go short, I'm going to be all over that and really looking for the euro to then hit parity to go towards the 1.000 level at the very least, and potentially even lower than that. You know, what you've got to look at here is looking at this on the weekly chart. We've got a huge amount of downwards momentum, and after that sort of downwards momentum, you expect the market to make another to have another go at going short after something like that. You don't expect it just to completely turn around on a sixpence, although it can do that. I'd be expecting the market to give it another go to the downside before it eventually turns up, but we'll have to wait and see what happens there. The pound dollar, I think this one here is a very, very good shorting opportunity. We're playing with these structure levels here. If you remember in last week's video, we were waiting for the market to pull back somewhat. The market has since done that. It's done it on the 4-hour chart, which looks very good. We're playing with this previous level of resistance, which is this previous level of support, sorry, which is now acting as resistance. And if we can get some respect to that level and a breakdown of this area here, so ultimately the market breaks through these support levels here, as you can see on the 1-hour chart and on the 4-hour chart, then I'm going to be looking to take this short. So this is one that I'm going to be looking to execute as well. Okay, and then that so that wraps up the charts for this week's Forex Focus. I hope you enjoyed that and you found a lot of value in there. There's, as I said, there's a lot of opportunities to have there. The one thing that you need to be careful of is that there are quite a few correlated trades there. Now there's a few ways that you can play this. You can either decide to take the best setup, so just take one, or you can look to mitigate your risk. Okay, and you can diversify by splitting your position up into 3 or 4 different little positions and taking all of the trades. And what that ultimately does is says, if the market goes with you, you know, all of them go with you, then you make money. You make what you would have made if you just had one position on. If it goes against you, then you lose money. So you lose what you would have had on if you had just one position on, right? But here's the genius. Here's the part that's really, really good. If, let's say, for example, some of the positions go with you and some of them go against you, then you should actually come out ahead of the game anyway, because you'd have a positive risk reward on your trade, okay? So the downside is exactly the same as if you had one position on. The upside is the same as if you had one position on as well, okay? So if all of them go against you, then you lose what you would have lost on one position. If all of them go with you, then you make what you would have made on one position. Okay, so if the correlation remains, is what I'm saying. But the great part is that if some go against you and some go for you, you can actually still come out making money. So you're giving yourself this sort of middle ground where you're not dependent on just one position. Okay, and the key to successful trading, the key to longevity, is being able to run a portfolio, to being able to diversify your risk so that you're not putting all of your eggs on one basket. Okay, so I'll get off my soapbox now. Obviously, it's down to you, the way that you want to trade that. If you want to trade it one position at a time, fair enough. If you want to give trading a portfolio a go, then I really, recommend, I advise that you should take a look at it at least. Although, we're not authorized or regulated to give investment advice, so you still have to do your own due diligence, and you still have to make up your own mind as to whether it's right for you or not. Finally, before we round up for today's show, I just want to say, for those of you that have signed up to the DAX Trading Academy, welcome. It's great to have you on board, and I'm looking forward to getting into the live trading sessions and all of that kind of good stuff. For those of you that haven't, we're going to be closed. Well, more than likely, we'll be closing the doors either this evening or tomorrow, I would imagine, at the very latest. because we've already or almost filled up all of the 100 spots. We opened it on Monday, and I think we're up to about 87 or 88 people so far. So we've got about another 12, 13 spots left. If you're interested in joining the DAX Trading Academy and learning to day trade, basically what that is, if you've got sort of like an hour or two a day to be able to look at your trading. I primarily trade the DAX, which is in the morning between 8 a.m. and 10 o'clock UK time, but obviously you can pick the trading times that suits you. But if you want to learn that, if you want to get on board, then make sure you do it literally either today or tomorrow, because the spots have gone very, very quickly, and I don't anticipate that there will be any left after tomorrow night, being Monday night. Okay, I'll post a link below the video here, so if you are interested, then just kind of hop along there and sign up. Otherwise, thank you very much for watching the Forex Focus. Please, as I said last week, look forward to the new Forex Focus that's going to be coming out in the next week or so, where my brother's going to be getting involved. The format will change a little bit. As I said, please, we haven't had anybody send in their trades as we requested last week as of yet, but please send in your trades because we will review some of them when we start the new Forex Focus. Okay, so that will be part of the new show format. Sorry. Okay, if I learn to speak English, that is. So anyway, thank you very much for watching, and I look forward to speaking to you on the next Forex Focus. So take care now, and good trading.